Pundits and analysts have begun taking victory laps, announcing the arrival of the Fed's long-awaited soft landing. But is it really here? And if it is, what does that mean for silver and gold? Stay tuned. Now, before we begin, please take a moment to like and subscribe. Thank you. Let's start with a definition. What is a soft landing? Whenever the Federal Reserve begins what's called a tightening cycle, that is a period where they're raising rates and trying to restrict the money supply, they run the risk of causing a recession. In fact, some studies put the odds of a recession after a tightening cycle at about 90%, while others say it's closer to 60%. A recession occurring would be considered a hard landing. If the economy and labor market manages to normalize, inflation is reduced, and we avoid a recession, and maintain positive GDP, then we have a soft landing. It's frequently the case that recessions catch people by surprise, but the yet-to-materialize recession has been the most widely predicted recession of all time. Everyone expected one, and yet it still isn't here. Some experts are tired of waiting and have called it in favor of the Federal Reserve and declared success. Now, call me superstitious, but it seems like we might be tempting fate. I'm not a big believer in counting my chickens before the eggs hatch, and we still have some major hurdles in front of us. The commercial real estate sector has a looming disaster that even Fed Chair Powell believes will adversely affect regional banks over the course of many years. Now, when Powell appeared on 60 Minutes in early February, he expressed his concern about the commercial banking sector, with comments echoed by Janet Yellen shortly thereafter. We also see an empowered BRICS coalition chipping away at the US dollar, regional conflicts spreading across borders, credit card and auto loan delinquency rates rising, banks carrying over $650 billion in unrealized losses, and inflation is still above the 2% target the Fed has been pursuing. So there's still some rope to trip on our way to that fabled soft landing that we're all hoping for. But just because there are some obstacles and challenges ahead, that doesn't mean we won't overcome them. We have a long history in America of overcoming steep odds. It's a good reality check to acknowledge the potential pitfalls, but in the spirit of optimism, let's say we do get past all of that. Let's say the soft landing does materialize. Now, what does that mean for silver and gold? Let's start with gold. Gold has a very interesting dynamic in that regardless of whether we have a soft or hard landing, gold is probably going to continue to rise. The market for gold has become price insensitive. It's buoyed by central bank gold buying, and there's a bullish case for both a hard and a soft landing. In the hard landing scenario, we have a recession, which will almost certainly prompt rate cuts. We have some videos on this you should check out. Gold typically does very well in a recession environment. And if we have a soft landing and the Fed feels that the mission was accomplished, they're on the record saying they will still lower interest rates. When interest rates lower, we expect that gold will perform better. In fact, just the mention of future rate cuts this past December spurred gold to new all-time highs of $2,135 per ounce. Now, silver's future is a little more uncertain. Silver has a wild card in retail investment. It's all of you folks watching at home stacking your silver while enjoying this program. Retail investment can create some wild swings in demand, as we saw after 2020 when silver buying sharply increased. However, retail investment in silver is estimated to be about a third of demand in a strong year. Industrial use of silver is much, much higher. Over half of each year's net new supply goes to industrial use in things like electronics, solar power, electric vehicles, brazing alloys, and more. I have a firm belief backed by data that a strong economy will result in higher demand for goods and services that consume silver than one that is in recession. So in a hard landing situation, aka a recession, silver historically does not perform well. But in a soft landing, we could see industrial consumption of silver continue to rise. In a soft landing scenario where the economy remains strong and rates are cut, it's a sweet deal for silver. And there are two reasons. The first is that lower rates encourages borrowing. Businesses and consumers both borrow more and spend more when rates are lower, which increases overall consumption and therefore would increase demand. The second is that lower rates will probably spur gold on and could potentially bring silver up a bit with it. Now, silver has its own wild cards, as I mentioned. The US government approved trillions in spending in the Build Back Better bill, and that's going to create tailwinds for silver for years to come. We're talking about hundreds of billions of dollars earmarked to support industries that increase industrial demand for the world's most reflective metal. I'm not sure if wildcard is really the right way to describe excessive government spending since it's predictable, but sometimes money flooding into industries has an effect we aren't quite expecting. So it's a wild card in the sense that the total demand it creates should be a net positive for silver, but nothing is ever guaranteed. So how will we know if we're in a soft landing or hard landing? That's probably the next question to answer. Now, the truth is that it's a moving target, and it's one of the reasons economists don't agree on whether we've achieved a soft landing or not. But here's a sober means of looking at it. If the Fed is continuing to tighten or keep rates elevated and 2% inflation has not yet been achieved, then we cannot declare a successful soft landing if we're still in the process of achieving it. If inflation is brought down to 2%, price stability is achieved, and the Fed is willing to lower interest rates, and we have not had a recession, then a soft landing has been achieved. Now, we know from recent comments from Powell that a March interest rate cut is just not in the cards, barring some unforeseen catastrophe that forces their hand. This means May is the earliest we would likely see a rate cut, and the Fed is adamant that price stability be achieved before initiating cuts. This would suggest we could declare and accept a soft landing in May of 2024 if the Fed lowers rates, inflation is at 2%, and first quarter GDP is positive. So there you have it. Overall, gold seems primed to do well in either a soft landing or hard landing, as global demand has done nothing but strengthen over the past few years. Silver would probably be harmed in a recession or hard landing, but is set for success in a soft landing. And we should expect to have a clearer picture in May. That's all we have for you today. Please remember to like, subscribe, and share with a friend. Thanks for watching, and we'll see you next time.